What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is November 9th of 2019. Well, folks, I hope you all are having a fantastic day wherever you are, and in today's video, I want to spend some time to talk about what is probably the most important topic to understand if you're trying to understand where Bitcoin is going to be going over the next few months, and that is the Bitcoin halving. And this is an event that happens from time to time on the Bitcoin network that is programmed into the protocol to reduce the generation of new coins over time, as it is a deflationary currency. So we'll talk about the mechanisms of the halving as well as what it means when it comes to analyzing price to get a better understanding as to where we're going. We're going to dive into all of that and more as we go throughout the video right after our quick sponsor. Our sponsor for this episode is CoinDeal. CoinDeal is a leading cryptocurrency exchange that provides trading services to a global audience. CoinDeal is available to US traders, and if you register before November 12th, you can receive up to 100 CDL coins, the native currency of CoinDeal, which you can hold or use to pay down fees on the platform. They also launched a referral campaign that allows you to earn Bitcoin for each referral, as well as a chance to earn even more if you're in the top 10 in total referrals. To get started, check out the link down below and claim your CDL tokens today. Alrighty, everyone, so let's go ahead and dive into this extremely important topic. And before we dive into it, I would ask that you all bear with me. It is a bit early. It's about 3:30 in the morning on the East Coast as I'm flying out to Singapore in a couple of hours. But as you all know, for me, the show must go on. I absolutely love doing these videos, and I absolutely love talking about this topic. So before we dive into the technical side, let's go ahead and understand fundamentally what the Bitcoin halving event is, for those of you who may not know. So the Bitcoin halving event is a pre-programmed functionality of supply in the Bitcoin protocol that happens about every 4 years, and simply put is a reduction of the amount of Bitcoin created about every 10 minutes on the Bitcoin network. As some of you may know, the function of the Bitcoin reward, or the block reward, is programmed into the protocol to serve as an incentive for people to validate transactions on the network. About every 10 minutes, it's not always exactly 10 minutes, but about every 10 minutes, a miner will discover the proper hash, in this case, to prove that they have done a certain amount of proof of work to become the next validator on a block of transactions on the network. And for putting in all this computational power that they have to in order to get that hash, they receive a reward, which is newly minted Bitcoin on the Bitcoin network. And over time, as we consider these kind of 4-year waves, this is how often we have halving events, we can take into mind, how over time Bitcoin reduces overwhelmingly how much new coins are minted every single 10 minutes, right? So back in 2009 and 2011, the minting of new Bitcoin every 10 minutes was about 50 Bitcoin. So if you discovered a block, you would get about 50 Bitcoin. And that was a huge amount of Bitcoin being created every 10 minutes, to where we had a lot of the Bitcoin supply growing back here in the early years. And then over time, in 2012, that got reduced to 25 Bitcoin. And after that, about 4 years later, in 2016, we saw that drop from 25 Bitcoin to 12.5. And then we're looking forward to the next halving event where this is going to be reduced down to 6.25. So it's very mathematically predictable. And not only that, we know when that next halving is likely to happen. And that's going to be sometime in May of 2020 in this case, right? So somewhere around this range here. Now, again, it can fluctuate. It could be in the earlier part of May, it could be in the later part of May, as Bitcoin's production schedule is not only fixed, but we do have to factor the fact that the difficulty for Bitcoin is adjusted every 2 weeks. And this has to do with an increase in hash on the hash rate on the market. So if more people are competing, it's in order to adjust in this case to make sure, even if there's increase in hashing on the network, that we have a relatively predictable schedule, okay? So I've rambled on enough about that. We get the fundamentals, but I thought I might as well go ahead, when we take a look at the technical side of things, use an article from one of the individuals that I really respect on Twitter, and I like because he's kind of a no BS guy. He covers some really interesting stuff, and that is Wrecked Capital. And he actually sent me a really cool article on the halving that hits all of the major points that I've tried to kind of preach to people over the last few months, and we'll go ahead and use it as kind of a framework for this video, okay? So, as we talked about, it's the halving event. It's an event that's pre-programmed to Bitcoin, and we're looking forward to a reduction from 12.5 Bitcoin to 6.25 here in the coming months. So let's go ahead here and look at some of the previous halvings. We've really had two in Bitcoin's history over the last, really we've had Bitcoin as a protocol since 2009. So we actually only have about 10 years of price action to work with. So let's go ahead and get an understanding of what happened during these events. So we have our first one here. This blue line is going to be the indicator for these halving events when we take a look at these charts. And we can see here back between 2012 and 2013, we had the halving event here on November 26th of 2012. And let's go ahead and take a look at some of the factors before and after the halving, right? So we had a rally in Bitcoin, had a correction of around 93%, one of the most stark corrections for Bitcoin. And from a bottom of $2, went all the way up here to the halving event at around 1150, and then continued through and went all the way through to $270, setting new highs. Okay, now notice a few things. It will hit back on these points. At the halving event, we still hadn't passed the previous highs here at around anywhere from $30 to $48, right? And then along with that, afterwards, just really a matter of a few weeks after, we went on to make new highs at $270 for Bitcoin. So some very important factors to take into mind, and we'll see consistencies here. If we take a look at the second halving, right, we had a stark correction back here in 2012 after going up towards $1,100. We had Mt. Gox, we had the craziness that was, the rally into the Silk Road and all these interesting phenomena that were going on for Bitcoin. And then we had a consolidation period. And then as the halving happened here on July 11th of 2016, we still hadn't gotten past previous highs. And not to mention, we actually had a few weeks of correction, right? Very interesting point to take into mind as we'll talk about. But afterwards, we had a rally towards the next all-time high of 20,000. The crazy rally that we had in December of 2017. And well, a few months beforehand. But again, December was when things went exponential. So now that we understand these two previous halvings, we've seen that there are some similarities. Let's go ahead and really highlight the key takeaways here. Okay, so the first thing to understand here very clearly, we can see on the chart, there is nothing fundamentally about Bitcoin more than the halving event that is going to serve as a catalyst for the next Bitcoin cycle. Okay, it is fact, guys. It is absolutely rooted in the most key element of just about any market, and that is supply and demand. Okay, and the really cool thing about Bitcoin, unlike equities or for example bonds or pretty much any market, even gold and silver in this case, where the supply is quite variable in gold and silver markets. It's actually been increasing at a 2 to 3% inflation rate and actually growing over the last few decades, which has actually hindered its ability to be a store of value. What makes Bitcoin an amazing store of value, almost a perfect store of value, is its fixed supply schedule. There is no asset like this on the planet where over time it is not only relatively predictable, it is finite, it is deflationary by nature, and we know predictably every 4 years we're going to see a reduction of the amount of Bitcoin being cut in half every 10 minutes. This is extremely huge. So if we have a predictable supply, it's only a matter of time to see a reflection of growing demand. And that is going to be reflected in price, right? Demand is the only variable factor. Bitcoin could still fall off the face of the earth. No one could care about it, even though the supply is being reduced. But having that supply factor guaranteed makes it very, very predictable that it is going to see these kind of exponential rallies, and when we're going to see these exponential rallies, okay? So the second thing to take into mind as well after we've understood this is that Bitcoin has rallied between 12,000 to 13% in each of its halvings to date. So this is why it's important to understand when the halving is happening, and also to be patient for the halving event, right? Because these gains happen after the halving has come into fruition, and it doesn't always happen immediately after. So in this case, if we understand that in May of 2020, we're going to get the halving, we obviously can see historically that there is something to look forward to. There is something to be patient for. But in being patient, we have to understand that this isn't going to happen next week. We are not going to see price go past the previous highs of 20,000 before May of 2020 if history tells us anything. And that's again another thing to take into mind, right? As we set up for this halving here, we can see a very similar, thing playing out here in the sense of price. The highs at 20,000, we still haven't reached up there. We had a recent high, a relative high at 14,000, and we're still a good few months away from that May 11, 2020 date, right? So we're going through what appears to be a little bit of a sideways move, a little bit of a correction here. And we know in October and November, right, this has played out a little bit longer. We've had a continued decline and have held down around the same price range we're at right now. But everything is playing out as it's historically been. We have our 80% plus correction, consolidation, and a rally off of the lows. And we still haven't gotten past the highs as we're looking forward to this date. Now, there are a few other things here as well to take into mind. There's a little bit more of a detailed breakdown. I don't want to dive too much into this because we can go ahead and take into mind some of these key tendencies, okay? Again, most of the exponential move happens after the halving event. So if you can take that away, you'll know that it's time to be patient and not really to fret over the smaller moves in Bitcoin's price if you're in it for the longer term cycle. And again, you guys can dive into some of the more details here. I think Rec does a great job talking about this. Another thing that he points out that I actually didn't notice when I looked at Bitcoin's halving over the last 2 years, is that Bitcoin experienced stronger and quicker growth prior to the first halving, in the first halving event, compared to the growth prior to the halving of the second. So what I mean by this is that there was stronger growth in the first halving event leading up to it, and then prior to the second one. So we actually saw that there was pretty much twice as much movement, around 663%, in the recovery off the lows leading up towards the halving event than there was for the second one, which was around 383%. So I'll go ahead and show you that on the chart, guys, to get a bit of an understanding. We have the two charts here. You can see we went from $2 all the way up here to about $11.50, whereas in this recovery, right, we went from about 164 upwards towards about, I would say it's somewhere in this ballpark range between the high here at 794 and the low here at 480. I'd say if I was to guesstimate on price here, somewhere probably around 500, okay? So 500, 550, that's where I probably had the ballpark estimate there. But if we take that into account, it's a very important factor. The other thing to take away as well is that even though we have a more heavier recovery in this case for some of the smaller ones in the past, it actually tends to be that we get stronger rallies afterwards. So if Bitcoin rallies less in its pre-halving, right, it will rally more post-halving to play catch-up in this case. So in the rally where we had 683%, we actually didn't get as significant of a rally as we did when we only rallied 383% from the previous lows after the correction towards the halving, right? So as we pointed out in this chart, you actually got a stronger rally in this halving event than you did over here. We only went from this halving event here around 1150 to 270, right? So we actually got a bigger rally off of this one, even though it was a larger market, even though, again, we should be expecting decaying returns over time. It's because we're playing catch up on the supply cut. We're still cutting it 50% every time. So again, that's one of the things that Recht brought up, and I'm not 100% certain. I don't want to say it's set in stone that we can expect anywhere near the returns that we got last time. I actually would probably disagree, not so much with Recht on that, just with the assumption, right? I'm not saying he's making that. But my point here is that if we don't get as significant of a rally beforehand comparative to previous ones, it's likely that we're going to play some catch up. I can absolutely agree with that. Now, key tendency 4 here, last one that I want to talk about, is that there's always been a pre-halving retrace or a shakeout, okay? Now, you've probably heard people talking about weak hands and shaking people out, and that is very true when it comes to Bitcoin, okay? With just about every halving event, right, if we take a look back in history, we can see here in the previous one, right, I'll go ahead and pull it up here on the chart. The halving event happened here, and we had a very stark correction beforehand. Not only a rally pre the halving and the anticipation of it, but a shakeout where for a few weeks we actually saw price declining and not rallying off of the news. And we tend to find this historically, right? So this is something to keep in mind. When we get towards May 2020, do not fret over a lack of price action. Do not fret over the short-term moves. Even though we went from $660 to $477 at the time, which was very significant, right afterwards, just a few weeks, we continued on to set brand new highs for Bitcoin week after week after week, going all the way up to 20,000. The perspective here, guys, in summary, right, is that this is predictable. We understand that this is going to happen. It is programmed into the Bitcoin protocol. Why try to worry about what's going to happen next week, what's going to happen in the next month, when we know historically that Bitcoin's supply model gives us a very predictable understanding as to where Bitcoin can go? That Bitcoin is going to reach exponential highs a few months after these supply cuts come into play. I can tell you guys, I've been studying finance for the last few years, and there just isn't anything like Bitcoin. There isn't any asset class like Bitcoin and cryptocurrencies with these supply schedules. And Bitcoin is, it's actually kind of crazy. Out of most cryptocurrencies, is the most kind of deflationary currency that has a long-term track record, right? It has been time tested. We have seen that it has an actual market built around it, and the market reacts to these specific supply cuts. It's a very fascinating topic, and I hope you guys geek out about it as much as I do. But if you liked the video, drop a like. I want to go ahead and say thanks to Rect for the article. I think it was a really great precursor to talking about this topic. You guys should definitely go follow him over on Twitter. He's a great guy. And outside of that as well, you guys can read a little bit more through the article. I'll leave it linked down below so you can get some more information on it. But again, if you guys enjoyed the video, drop a like. Leave a comment as to what you think. Do you think that we're going to see history repeat, or are we going to see a little bit of discrepancy? Are we going to see a difference from what we've seen in the past? It's a very interesting question. But until the next video, guys, I hope you all are having a fantastic day wherever you are, and I'll see you all in the next one. Stay tuned.